I mean, the economy's a disaster. Tech layoffs, Democrats drinking the blood of babies, Hunter Biden's laptop. It's a disaster.
We're back now with some breaking economic numbers.
Yeah, new data shows job growth jumped by more than the expected in January, with the U.S. economy adding 517,000 jobs last month, much more than expected. The unemployment rate inching lower to 3.4%.
What? In our big tech layoff video, we spoke about the surge in layoffs on both Wall Street and the tech sector, where it seems as though companies are stoking recession fears to provide cover for cutting staff and to boost profits. For example, Meta reported that it would lay off 11% of its workforce right before beating earnings expectations that led to a $100 billion increase in value, announcing that it would, of course, use those proceeds to buy back shares. You could see from a mile away that there really wasn't a crisis in the tech sector, but there is a seismic shift underway. There's a concept called Moore's Law that was established by a tech engineer in the 1960s named Gordon Moore. His theory held that the semiconductor capacity would double every 2 years, which would lead to exponential growth. And he was right. And because he was right, this theory was co-opted and applied in multiple industries with varying degrees of success. But we're in a place right now in tech where there might be a good reason to revisit this notion. The pace of AI innovation might have crossed a threshold recently, and many of the big tech companies are doubling down. Microsoft, for example, recently announced that it was investing $10 billion into OpenAI, so don't mistake tech layoffs for a lack of exuberance. And just to reiterate, the layoffs on Wall Street fell heavily in the area of mergers and acquisitions, and that's related to the increasing cost of capital from the Fed interest rate hikes. Basically, it's harder to pull off massive deals that involve debt because money is more expensive. But this job market data is surprising people in a way that it honestly shouldn't. Again, we spoke about this in the layoff video. We killed more than 1 million Americans due to our COVID response, leading to the first ever decline in population growth last year. Our punitive immigration policy has reduced the only number that matters in terms of migration, and that's something called NIM, which stands for Net International Migration. Net migration into this country, and this accounts for all migration, illegal or otherwise, do you hear me, Fox News? Has declined 1.25% each year for the last 4 years, during both Trump and Biden's terms. And lastly, the boomers that left the job market during the pandemic aren't returning, nor are they getting any younger. But the Fed has insisted upon hiking rates in order to quell the job market, or so it says. Something just doesn't track. I think there are those who genuinely believe at the Fed in the neoliberal mythology that 5% to 6% unemployment is necessary to balance inflation and GDP growth. But they must also see that there simply aren't enough people to fill positions, and that attempting to force people out of the job market is just folly. Yeah, but the labor participation rate dropped under Biden. At least Trump had everybody working. Really? It is true that our participation rate has declined from a high of 67% in the late 1990s. Right now, it's at about 62.4%. Under Trump, it reached a high of 63%. But if you listen to conservative outlets, you would think that a bunch of lazy and entitled workers are living on government support and just refuse to work. If conservatives had it their way, senior citizens would be working 40-hour work weeks and children would be allowed to work as well. And if you think I'm kidding, recall that just a year ago, Ohio and Wisconsin were trying to loosen child labor restrictions in order to fill gaps for hourly workers. The economy is on fire. It just doesn't feel like it because core inflation has been such a significant factor. Our money just isn't going as far. But again, I turn your attention to the fact that all of these corporations that are crying about inflation and warning of layoffs and recording historic profits are using their profits to buy back shares. Yes, the Nasdaq suffered for a while due to the high representation of tech stocks on the index, and many of the big funds that are heavy in tech declined over the last year as well. But that's because they were backing off pandemic highs, and Wall Street is the ultimate "what have you done for me lately" boyfriend. You see, I think the Fed understands this and simply took the opportunity to finally prop up the bond market after 15 years of free money to corporate America. And I guess that's okay to a degree, but it certainly has come at a cost to the consumer, even if they're deflecting with the inflation argument. For example, it's making adjustable rate mortgages more expensive. Do we really need to relive that nightmare? And of course, it's led to a slowdown in new mortgages as well, which the millennial generation certainly didn't need. Anything with an interest payment attached to it just got harder, and it hit the consumer just as much as food and fuel prices. But with core CPI elements coming back to reality, the Fed is now in a weird spot. Does it keep pushing the envelope with rate hikes under the false promise of cooling a job market that can't be cooled? The other area of concern that we raised briefly in the tech video is what's happening with foreign debt. For example, Lula was re-elected in Brazil to try and restore the economic highs and social reform programs that Bolsonaro and the pandemic destroyed. But he's facing an uphill battle due to the increasing weight of foreign debt. Other emerging market economies are facing a similar struggle as the Fed continues to push rates. Parts of sub-Saharan Africa are at particular risk due to the increase in carrying costs on international debt. On the flip side of the global coin, the IMF recently forecast that the only developed economy that will experience pain is the UK. I guess that's what happens when you make important economic decisions based on your distaste for immigrants and remove yourself from the comfort of the largest trading partner with the two super economies in the world. It's also widely believed that China is about to experience a massive resurgence. A country that was essentially on the sidelines for 2 straight years, 15% of the global economy, is about to take off like a rocket. Unemployment is at the lowest rate since 1969. Corporate profits are still at record highs. Inflation is cooling, except for eggs. Good Lord. China is about to take off. Oh, and the government is about to send $3 trillion into the economy over the next decade to shore up our infrastructure, construction jobs, incentivize the green economy, technology and manufacturing jobs, also construction, and give relief to senior citizens on the cost of prescription drugs and coverage, thereby helping them secure a dignified retirement. Look, there's a lot more that I don't like about the packages sending $3 trillion through the economy in the next decade, but on balance, these investments are so large because they're overdue, and in some cases, still not enough. We can argue the merits of the dollar amount and the direction, but here are the 2 key takeaways. 1, the investments are into sectors that have little to do with core inflationary elements. Just like defense spending doesn't increase core inflation, neither does infrastructure spending. The other takeaway is that we haven't begun to see the effects of large-scale jobs on the overall economy. The last time we invested this heavily was in the post-World War II era, which led to historic gains for the middle class. I know this is just one jobs report. The lowest unemployment rate since 1969 is astounding. It's testament to the lessons learned after the financial crisis and to the fortitude of Democrats and progressives who demanded that we invest in our future. Meanwhile, Republicans, admittedly, have also been doing some important work, like filing federal lawsuits to block student debt relief, trying to raise the Social Security retirement age, trying to privatize Medicare and Medicaid, trying to cap the debt ceiling by cutting entitlements, investigating Hunter Biden's laptop, throwing Democrats off of key committees out of spite. Great work. Here endeth the video.